Okay, so let's make a full breakdown of the situation that we currently have on AUD CAD. Let's start from the monthly time frame. Now, on the monthly, what we can see that clearly the market has created this W formation. Now, after a W formation on the monthly time frame, what do you expect? You expect the market to give you a move to the downside. Specifically, after a W formation on the monthly, you definitely want to see the market make a pullback back to the neckline, aka the previous resistance, which is now turned support from a monthly perspective. Now, in this case, it is this zone here. So immediately from the monthly time frame, we can see that we have an overall downside target, as we said, from a monthly perspective at this structure area, which is the previous resistance, now turned support. What we can also see is that if we want informations on this retracement, what are we supposed to be doing? Taking our Fibonacci on the impulse. So from the low to the high of the impulse. And what we can see that by doing this, we clearly aligned the 0.382 Fibonacci retracement with the previous resistance now turned support, meaning that at this area, we basically have a confluence of support, which will act as a magnet for the market. And we definitely expect the market to go and give us a retracement to this confluence of support of the 0.382 Fibonacci retracement with the previous structure resistance now turned structure support. Going down on the weekly, what we can see. On the weekly time frame, we can see that the market definitely seems quite overextended to the upside, with the market creating another impulse correction, an impulse pattern to the upside without having given us any kind of deep retracement. So definitely the market seems overextended on the weekly. However, we must be a little bit cautious in looking for shorts, because as we can see on the weekly, this very long wick, usually this kind of candles get filled in. So we might see this weekly candle go a little bit to the upside, the weekly candle that we are currently trading in. We might see some move to the upside this week before the market can possibly really start the real move to the downside that we want to see from a monthly perspective. Going down on the daily, what we can see. Now, on the daily time frame, we can see that the structure of the market is finally shifting. What do we mean by finally shifting? I mean that the market is currently creating this head and shoulders. In fact, the market had created this impulse correction higher high, and currently the market is creating an equal low. After an equal low, you expect a retracement and the creation of a head and shoulders for the possible move to the downside. So basically, we have structured resistance at this area from which we expect the market to make a test and then drop to the downside. Now, before I show you how we will be approaching this situation on AUD CAD with students, let's go and give a quick check at what we have from a COT perspective on the AUD and on the CAD. So what the biggest banks and institutions are currently doing on the Australian dollar and the Canadian dollar. Let's start from the Australian dollar. What kind of situation we have? Now, from an institutional perspective, we can see that on the Australian dollar, institutions have been aggressively buying the Australian dollar. In fact, we went from minus 54K net positions with 103K shorts and 49K longs, all the way up to having way more longs than shorts with 45K longs and 41K shorts with 4.2K net positions. But now we can see that with the last reports, net positions have again shifted to the negative side with 5.4K shorts added with the last report alone. So we can definitely expect a wave to the downside start developing, since institutions have started to add shorts again on the AUD. And if we go and see what we have from a CAD perspective, we can see that we went from minus 35K to minus 12K net positions, meaning that net positions are increasing with longs getting added from an institutional perspective on the CAD. So CAD is getting stronger with longs going from 19 to 32K. So definitely institutions have started to sell the AUD and buy the CAD. So can we expect a move to the downside? Absolutely yes. And how we will be approaching this pair with students. Just because you want to see the move to the downside doesn't mean that you can just short. That is not how trading works. Trading is reactive. It is not predictive. So after the market, and if the market will give us this retracement back inside of this area, at that point inside of the zone, this is where we will be monitoring price action with students on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries inside of this area, then we will be taking a nice short with a very good risk to reward and very good probabilities at that point for this move to the downside and completion of the monthly W formation. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.